let me step back a little and elaborate on our monetary policy stance. Monetary policy had moved from neutral to accommodative stance in June 2019. At that time, repo rate was 5.75%. Headline CPI inflation was hovering around 3% and was expected to be in the range of 3.4 to 3.7% in the second half of 1920. And liquidity was in deficit mode with an average daily injection of 0.3 lakh crore in May 2009 under the Liquidity Adjustment Facility, that is LAF. Today, inflation is hovering around 7%, and we expect it to remain elevated at around 6% in the second half of this year. Liquidity remains surplus with average daily net absorption of rupees 1.1 lakh crore under the LAF in September 2022, and this is up to 28th September. As government expenditure picks up on the back of high GST and direct tax collections, the system liquidity will go up further. Thus, even as the nominal policy repo rate has been raised by 190 basis points so far, including the increase that we have effected today, the policy rate adjusted for inflation trails the 2019 level. The overall monetary and liquidity conditions, therefore, still remain accommodative, and hence the MPC decided to remain focused on withdrawal of accommodation. I would now like to provide our assessment of growth and inflation, and first let me take up growth. Real GDP grew by 13.5% year-on-year in the first quarter of this year, this financial year, that is 2022-23. Now this surpassed the pre-pandemic level by 3.8%. This was led by robust growth in private consumption and investment demand. High-frequency data for the second quarter indicate that economic activity remains resilient. Private consumption has been holding up. There is sustained revival in urban demand, which should get a further impetus from the unfettered celebration of upcoming festivals after 2.5 years of living with the COVID-19 pandemic. Rural demand is also gaining gradually. Investment demand is picking up and is evident from the robust growth of domestic production and import of capital goods in July and August. Bank credit has grown at an accelerated pace of 16.2% year-on-year as on September 9th, as against 6.7% during the corresponding period of last year. Total flow of financial resources from banks and non-banks to the commercial sector has improved significantly to rupees 9.3 lakh crore in this financial year so far, that is up to September 9th, from 1.7 lakh crore in the corresponding period of last year. So this year the flow of commercial resources is 9.3 lakh crore compared to last year figure of 1.7 lakh crore for the same period.